All right. Morning, everyone. Welcome back to our Morning Kapai at 8. I'm Joseph here. So hope you had a very good weekend. Let's look at the market. And what we do see is that last Friday, right, the Hang Seng has printed a bearish candlestick, showing that the sentiment resort to cautious right now. What happened over the week is that last week, the Trump have actually announced the US AI action plan, so that the US will win in the AI race. So there's a few key points there. Firstly, they are going to continue to export the AI technologies to the US partners and friendly countries. Um, Also, they hinted that they are going to continue to curb the technology export to the not so friendly country, i.e., the China, Iran, Russia, and so on, right? And also, both the country, US and also the China, both are actually raising to have a leadership positions in this AI. Both country also eyeing to set some sort of standards, especially the China. Last Friday, the Prime Minister Li Qiang have mentioned they are going to looking forward to cooperate with the global is to set a kind of regulations or standards in the AI world, right? So last week, both the US and China kind of like going into a very strong race competitions in the AI space, right? So what we do see here on the price action is that on the Friday, right, the market have a mild profit taking, right? Likelihood is due to that piece of news. Nevertheless, looking at the Hong Kong market or the Hang Seng, right, very strong support has established at 23,000 point level. So as long as the Hang Seng stay above this key support level, right, it should continue to move towards 26 or even 27,000 point level, right? Also recap that 2 weeks ago, right, US have allowed the NVIDIA to export a kind of lower end or the Chinese versions of the chips to the China, which is the H20 chips. So definitely the market focus will be what will be the development on both countries regards the AI race coming down the road. So as of the US Chinese stock that list in the US market also printed a second consecutive bearish candlestick, right? Showing that the sentiment continue to be cautious at the Chinese stocks so far. But that's understandable. You look at the Hong Kong market, it have actually rallied quite strong recently for the past 1 month. So this pullback, I will view that as a very healthy pullback within an uptrend, right? And so looking at the market right now, I do think that the Chinese stocks are being led by the banking stocks and also some of their technology big cap stock, especially the company like SMIC, 981, Horng Semiconductor, right, Kuaishou, right, even Tencent also are moving outward. Xiaomi is undergoing consolidations, right, and recently we do see the SenseTime also resume their upside movement as well. So last week we also published a technical piece on the BYD. I think that we see that after a slew of consolidations, BYD have made a very meaningful upside breakout recently, showing that the momentum is actually very strong right now. So today we'll be looking at another two more counters. Firstly, Costco shipping 1919, right? They just break past a resistance of 15 Hong Kong dollar, heading towards 16 and 17 Hong Kong dollar. On the downside, supports market 14 Hong Kong dollar. Then on J&T Global Express 1519, they also break past the Hong Kong dollar 10 dollar resistance, heading towards $10.80, followed by $11.50. Now support is marked at $9.30. So one piece of internet news just to share with you is that COSCO Shipping is looking at some of the port assets that actually owned by the Li Ka-shing family. So I think that piece of news have boosted a very positive sentiment on the COSCO Shipping. And right now, looking at the share price, right, it is actually moving upwards after staging a bullish breakout. Meanwhile, J&T Global Express have been moving up, premise on a very strong volume. You can see that the share price have been moving up in tandem with the volume, showing that very strong bullish momentum underneath. So apart from the AI news, right, Malaysia also last week have officially seen the YTR Power partner with NVIDIA to push out the data center in these regions. So more investment is going to come in. So let's look at the Europe and US market, right? We can see that both US and Europe right now they are negotiating their latest the tariff, right? But what we do see right now is that sentiment has become slightly positive, right? After the SXSP climbed above the 550. So as for yesterday, right, the European president this meeting with Trump and Europe, right? We not know what's the outcome yet, but looking at the price actions, at least based on the news, we understand that the Europe are willing to sit down to negotiate with Trump. And last week, Trump did mention that he's no longer looking at 30% tariff, but he's looking at somewhere minimum of 15%. Right, I think that piece of news also boosted a sentiment on the SXXP as we right now see is testing the 550 point resistance so far, right? So apart from the Europe market showing a resiliency, right, we do see that US market continue to move upwards. S&P have a break past 6350 for the first time, and right now it's trading at a record high. And so far the momentum remains strong at the S&P, right? Is going to move towards 6,006. So on the downside, support remains at the 6,001 and also a very strong support at 5,008. Okay, right. Going for last week, right, the two big tech company have released their result, Google and as well as Tesla, right? Both stocks have so far underwent consolidations, but as of the underlying bottom line, right, Google have beat by percent. And apart from Google and Tesla, we do see a very strong set results from other company as well, such as ServiceNow and also the GE Vernova. Okay, and now this is our watch list for the US market. Just pay attention to this watch list, and I think last week one of the counter that has been in our watch list, which is Coursera, right? Coursera have delivered a very strong set of results, and they have managed to stage a very huge gap up, went up by more than 20% in a single day. So Coursera, I think everyone have been familiar with the counters, and just it came to our US trading stocks market outlook, right? We did actually share a bit on the background of Coursera, right? Looking at their fundamentals, a very strong cash flow, and their revenue has been growing steadily so far. So I think that the Coursera this counter have actually remind us that in this market, we should actually look for counters that actually have decent growth on the top line, and particularly their cash flow should continue to improve. Now look at the Coursera, the stock have been consolidated for at least 6 months, and right now just one piece of earnings, right? The share price right now is trading at almost at a 2-year high right now. So apart from that, I think IBM have give a bit of bleak guidance, right? The share price have pulled back after the earnings. Nevertheless, looking for the past 6 months, I can see that based on the price volume, Very strong support. I think it will be somewhere at about 100, about 250. As long as the IBM continue to pull down lower, right? Based on all these price volume that have been transacted for the past 6 months, that actually give me a very good guidance where it will be likelihood the support is. So in this example for IBM, instead of buying on the upside, I'll be looking for on downside where is the bottom, and probably this will counter that have a lower risk since the result have announced, and based on the price volume, we can see where are the support level. So let's move to the Malaysia market. Last week, consumer stocks have went up by 1.2%, industrial 1.1%, and REIT 0.7%. Meanwhile, the data center related sectors, utilities, property, and constructions, going for a mild profit taking. Okay. Looking at constructions, despite that last week it have a weekly loss, right? But it has been actually moving upwards since it found the bottom in the April. That shows that sentiment remains very bullish on the Malaysia constructions sector. I think this week, one thing that market will be looking forward to will be the 13 Malaysia plan that is going to be announced soon, somewhere this week, right? That will actually determine how much government going to spend on the infrastructures or the construction space in Malaysia for the next 5 years. Looking past for the past 2 years, 2024 and 2025, these two budgets, government have actually allocated quite a higher percentage on the development expenditure that actually have boosted a very strong performance in our construction sector so far, right? So we'll be looking forward for the 13 Malaysian plan this week, see how we actually give impact on the constructions index. Now, meanwhile, the consumer stock have dragged by the big cap stable food, but you can see that last week two counters have actually outshined the consumer sectors, the Speedmart 99, as well as our latest initiations reports on the Eco Shop. Both have actually moving on the upwards, and property sectors is a bit of lagging if you compare with the construction sector, but nevertheless, in the property space, our top buy remain on the Sime Darby properties, and we do have an initiation report on the Eco World last week as well. Okay, now both Sime Darby properties and Eco World, they recently have diversified their business into the data center, right? And as for the utilities index, it underwent a consolidation so far, and if the utilities index continue to move upwards, that you can see the FPM KLCR will be moving higher as well. So let's see after the official partnership between YTR Power and this NVIDIA, whether it will lift the sentiments on the utilities index this week. For FKRI, we still remain a bearish bias with support resistance unchanged at 1550. FCPO underwent a mild correction last week. Nevertheless, support remains at 4001, and that's where our stop loss is. And this week, this will be our watch list for the Malaysia stocks. We still see opportunity on the Penta with chocks of Star, ITMX, IJM. And today we have a Well-Chip Group with break pass with sitting on 1 ringgit and 22 cents. After a breakout, Well-Chip will be testing 1 ringgit 30 cents and followed by 1 ringgit 40 cents. Downside support is 1 ringgit and 15 cents. Secondly, we have a Sarawak team counter, which is Naim Holdings, break past the 94-cent resistance, also on the back of a high volume. So Naim will be moving towards 1 ringgit and followed by 1 ringgit 10 cents. Downside support is 87 cents. So we have one the small cap Jewel, Well-Chip Group that have staged a breakout. And then we have another Sarawak-based counter, Naim, that also staged a breakout. Okay, so you can take a look at these two counters. So I'll stop here and pass on to Xian on their weekly economic report. Thank you.
Thanks, Joseph. Thank you everyone for joining the call. We'll present on our economics weekly published on last Friday. So from our data observed, we see that US equity is approaching a point of resistance following a sharp rally since April. This is showing that the technical and indicators has showing some overbought conditions where they see the RSI and the momentum appear to be running, while the MACD indicator showing that there's a sign of flattening. So we note that the optimism from the US equity market still face some material risk, where the White House has reiterated their intentions to impose a reciprocal tariff ranging from 15 to 50%. So by this morning, early morning, we can receive a relative good news where US and EU has achieved a 15% deals agreement, where export from EU to US will have a tariff rate imposed of 15%, while US and China is in talk to extend the 90-day pause after the 12th of August deadline. So that's why we see some positive from there. On the Fed fund rate side, we are seeing that US labor resilience continue to support expectation for a pause for this week FFR move, where the initial jobs claim has fell to 217K for the week end of 12th July, and this is the lowest level over a 3 months period. And also the market-based expectations, which is the future pricing, is skewed toward no change for this month, and is only pricing at 60 with a 60% probability of 25 basis point cuts in September. The inflation picture still remain a headwinds for the dovish policy move, where we see the core CPI in June has rise over 2.9%. So our bear risk is for either one cut or none in this year, where we see also there's some political noise surrounding Fed Chair Jerome Powell leaderships. But this news has roughly subsided following the remark by US President Donald Trump suggesting the dismissals is unnecessary. So on a local front, Malaysia government has announced a 2 billion direct cash stimulus, and this is likely to provide a modest boost on economic growth. So based on our assumptions of 0.5 marginal propensity to consume and the SST rates of between 5 to 10% across different goods, we estimate the stimulus could add approximately 0.2 percentage point toward the 2025 GP growth. Hence, this might injecting upside bias to a full year GP growth of 4.2% to 4.4%. On the inflation front, we see the benefits for the CPI to ease toward 1.6%. This is against our base case of 2% and driven by a recent cut in the RON95 fuel price. So previously was 2.05 ringgit per liter, and currently the target price is 1.99 ringgit per liter. While on the fiscal perspective, these levels could marginally improve the government budget deficit positions to 3.7% of GDP. This is outperforming the official budget 2025 assumptions of 3.8%. This upside is supported by the SST-related measures and also the saving from the subsidy. On the dollar front, despite a strong US data retail sales, US retail sales data, the DXY has weakened as the market has shifted their focus from the Fed policy toward the political development at the White House. So US economy has remained resilient, but there's also coming data release that have a risk on that, including the FOMC meeting, second quarter GDP release, as well as the payrolls data. So a surprise move could leave the DXY toward 98.5, while the weak data on renewed concern over Fed independence may push it down toward 96. So separately, US 10-year yields has declined below the 4% threshold, reflecting a retreat in the risk appetite in line with our expectations. So for moving forward, we expect there's a further downside on the yields if the market sentiment continue to weaken further, particularly in response of the tariff developments or of the economic data. So at the week ahead, in this week, we could see some key data release. This include the US FOMC meeting at 31st of July, while we expect no change in the FFR as mentioned before. And also there's some data release between 30th of July to 1st of August, including the US L1 GDP, PC inflations, and also the non-farm payrolls. On the PMI side, Chinese PMI likely to release at 31st of July, while on the ASEAN front, Indonesia, Malaysia, and Thailand is releasing on 1st of August. So aside of all these data release, we also wait for critical announcement in the tariff news, particularly on 31st of July or 1st of August regarding the US tariff. That's all from me. Let's move on to the next speaker, Meng Horng. Thanks, everyone.
Thank you, Xian. Now we'll move on to a result review report for CTOS Digital. The results came in below expectations. First half core PATAMI of 37.1 million, which was down 21% year-on-year, was dragged by slower growth, delay in project recognitions, and underperforming previous investments. In terms of the gross profit margin, it has dipped to 68% from 73% previously, mainly due to lower margin international business, as well as the higher costs from the earlier product investments as mentioned. Now, the bottom line impact, however, was cushioned by stronger associate profits, which recorded a 43% year-on-year growth in its first half of 25. These were thanks to the better performance from Girostech, RAM Holdings, as well as BOL. They declare a second interim dividend of 0.65 cents, going ex on 25th of September. Now, in terms of the internal target and forward-looking statement, I think the management's revised down its internal FY25 profit target by 27% yet again, and they guided a sustainable growth trajectory about 10 to 50% per year going forward. This is following a cost optimization efforts, as well as they're gonna discontinue the underperforming investments come next year. A potentially higher growth trajectory would have to come from any potential new product innovation, as well as introductions to the market. On the other hand, associate companies, Girostech remains on its robust growth trajectory and will continue to build on its pipeline of project wins, while RAM Holdings is on course to deliver matching at 25 or better than 24 numbers coming from existing business, as well as a new rollout of different solutions. The building disposals was completed in June 2025, and a dividend of 32 million is expected to be received by CTOS Digital in the third quarter itself. Now we cut our FY25 to 27 earnings by 26 to 24%. This is after factoring in slower growth, as well as the lower margin assumption across all segments. Our BCF derived target price is now revised to 1 ringgit and 16 cent. It was 1 ringgit and 49 cent previously. This is inclusive of a 4% ESG discount. Now, although the plateauing growth trajectory may keep investors at bay, the valuation has also reverted to a palatable level. We're talking about below 20 times for a strong cash flow generation company. We still like the company for its unique exposure to the recession-proof CRA sector, with a lot of other digital solutions coming on. Now, keep buying on the stocks. 1 ringgit and 16 cent target price, representing a 36% upside and a 4% yield. I'll just stop here. I think that's all from us today. Thank you for joining us, and we hope to see you again tomorrow.